Card slips after reporting highest credit cost and low revolver rates in Q3. AU Small Finance Bank also under some pressure after a rise in slippages and deterioration in asset quality. Hello and welcome to Markets Forward, the show where we aim to get you all the key data points to gear you up for the next trading session. I'm Nigel D'Souza, and joining me, my colleague, Bandyopadhyay. Hey, Sudip.
Hi, Nigel. Well, we have a lot of ground to cover. It's the all-important budget week, and the bulls were really off to the races, you could say. So we'll talk about this and more as we go over the next 20-odd minutes. And we will bring you all the key developments on the street today, the top corporate voices and the events that you need to track. But we have to start, Nigel, by talking about this massive move that I don't think too many would have seen coming, looking at the way Monday opened.
Two big factors, right, why we went higher today. One was that the FIs were net short on the index. And as history suggests, when they're net short, it's not such a bad thing.
Yeah.
You know, when they go overboard on the short side. And the total short contracts at the start of trade were more than 1 lakh short contracts. Reliance Industries, that was the one that drove the markets higher, 1 lakh crore in terms of market cap. And if you're looking at the total gains on the Nifty, 45% came in just from this one stock. The crucial factors were today, it was a good move on the upside, and we knocked off some technical resistance levels as well. On the Nifty Bank, the 20, the 100 EMA, both of them got knocked off, and we ended above those levels. So that was good as well in terms of technicals. But Sarvina, you'll say it's such a good day, but select stocks didn't participate. So at the end of today, you'll be wondering, maybe if you're just looking at your NAVs or looking at your portfolio and said, hey, the markets did so well, but in fact, my portfolio didn't do so well. That's because today's rally was led by Reliance Industries and a couple of these PSU stocks that did very, very well. Case in point, if you look at an AU Small Finance Bank, if you had SBI cards in your portfolio, well, both of them were under some pressure. And the advanced decline ratio will tell you the picture. On a day that the Nifty went up in such fantastic fashion, up close to around 400 points odd, we had barely 1.5 stock that were advancing for one stock that was declining. On another day, you would say maybe it would be 4 or 5:1.
Yeah, no, absolutely. And on SBI cards and some of the other financial names, I think it's very clear wherever there are asset quality issues, it's a no-go, absolute no-go by the market. And we saw that result reaction play out on some of these financial stocks. More on this in a bit. But just to dial back and talk about the big headline move and, why it was so critical, as Nigel mentioned, a lot of the important resistance levels were taken out and taken out almost effortlessly. The 20 DMA for the Nifty, which comes in at around 21,630 thereabouts, was knocked off and we kept moving higher. And today it was not just, while Reliance was, of course, a major contributor, it wasn't only Reliance. A lot of the large PSU stocks did very well. You had banks come back and perform. You had major names like an L&T, which were contributing. So it was a fairly diverse move with the only exception of IT. IT was slightly a weakish kind of a link today. Just to talk about, the big buzz, and there are a lot of theories doing the rounds. There's this whole hope on maybe some demerger announcement comes in from Reliance. Then there is this theory of perhaps there's something coming in the budget on green transition, specifically on green hydrogen, maybe green hydrogen and green ammonia. They get the infrastructure status, which means they get more tax ops, companies that are sort of setting up these projects. So that was one big sort of chatter area in the market, and that got a lot of stocks excited. And the PSU rally, there's absolutely no stopping this one, is there? So in a nutshell, big day coming up ahead of the major event, which is the budget on Thursday and the FOMC announcement as well, which also for us, our time, we get to react to it on Thursday itself. With that, let's quickly move on and talk about what we have in store for you today. We'll start off with, of course, all the key movers. Vivek will tell us more about these big stock moves that we've seen today. Then the stocks in focus today, Adani Enterprises and Reliance. We'll delve a little deeper into all the reasons behind the massive move that we've seen on these stocks today. Then, of course, we come in with our segment D Street Chatter. Nimesh will tell us about Concor and why that stock was in focus. Last but not least, all the important market events to watch out for tomorrow. So let's kick it off then with Vivek, who has the list of the key movers and shakers of the day. Vivek.
Well, thank you so much for that. Clearly today we were spoiled for choice in terms of, the big stocks that were moving. But one trend that stood out, especially the fact that a lot of the old economy stocks were the ones that actually did very, very well in the session today. First up, we cannot go beyond the oil and gas space. Both the upstream as well as downstream stocks did very well today. But the common factor is that refining margins across the space is very strong. And that, of course, with all of the reasons you did mention, also aided the rally. So look at Reliance, ONGC, HPCL, BPCL, IOCL. Despite some dodgy earnings from, a few of these companies, stocks today were amongst the top gainers. The second set of stocks that we want to highlight is the entire PSU space, the names apart from this, they also did quite well. So have a look at Coal India, up 6%, Power Grid, NTPC, SBI, even Concor, one of the stocks that did very, very well in today's trading session. The next set of stocks, look at the infra pack. The pre-budget, there are a few expectations from the infra space, but the entire space today was buzzing. Have a look at IRB Infra, up 18% in the session. A positive CLSA note, some positive news flow, up 18%. NCC, J. Kumar, NBCC, Dilip Bilkon, all of them joining the rally. Also, one more stock we'd like to highlight is Voltam Transformers. Very, very good set of results from the company this time around. On the back of that, the stock did very well in the session. Now, moving on, some of the stocks that saw a bit of weakness in today's trading session. The first stock that saw a bit of weakness today was the top Nifty laggard. So Cipla, the stock over here, after the con call, the management said that some of the key launches were being pushed ahead. And on the back of that today, the stock saw a bit of profit booking. AU Small Finance Bank and SBI Cards, you did allude to them earlier. These stocks on the back of weak results actually saw quite a bit of a down move.
Okay, all right. Thanks a lot for that, Vivek. Well, joining us on the show today, we have Gaurav Bissa, who joins in of InCred Equities, as well as Sudip Bandyopadhyay of Inditrade Capital, who join us. Hi, gentlemen. Thanks so much for joining in. Well, Gaurav, you go first. What do you make of today's up move? Some of those crucial technical levels, they got taken out, and it seems the shots got covered on the wrong side. What's your view from here on? Do you think this market has enough legs maybe to go ahead and test a fresh all-time high?
Good afternoon. Yes, today's move was a bit surprising because if you look at the global markets, we did not see any sort of surprises out there, nor were any triggers on the commodity or the currency front. Today, that made today's move a very interesting one. And as you said in the beginning of the show, 150 points out of today's 400 points was out purely because of Reliance. So to answer your question, yes, it has sailed through quite easily. And if you look at even 50-minute chart, there was not even a single weak candle out there. Any profit booking, say 10, 20 points also was bought into. And that was the kind of strength we witnessed in today's market. The immediate resistances are now placed at levels of 21,850, which was the previous breakout area. Once it sails past those levels, we may head towards 22,200 and maybe lifetime high levels. So in my opinion, yes, the sentiment looks positive. It has gone above the crucial level of 21,550-600, which was the previous breakout area. It has also gone above 21,730, which was the previous lower high. So it has now formed a higher high, so meaning that the downtrend has again reversed, and we have come back again the uptrend. So the dips, if at all we are seeing, they will be bought into, and we may again sell higher. So yes, today's move has been very interesting one, and it has closed in the high point of the day and closed about 21,700. Tomorrow can be a follow-up buying of that, and we may head towards 21,800, 850.
Okay, all right. So that's the view in terms of technicals. But Sudip joins us as well today on the show. Hi, Sudip. Thanks so much for joining in. Well, the markets look good, but I quickly wanted your view on HDFC Bank. That didn't dance today. It was up only 1% or thereabouts. Valuations in favor, but lack of positive triggers. Your view?
Yeah, absolutely, Nigel. I think the lack of positive trigger is what plaguing HDFC. We know what happened post results. There was this massive disappointment and sell-off. The whole challenge is on deposit mobilization, and pretty much every bank has that deposit mobilization challenge in an environment where deposit mobilization is becoming difficult. But HDFC has a unique challenge because they have to cover up for the HDFC limited, assets which they've acquired on that SLR, CRR requirements. So their requirement is much more augmented levels. And unless they're able to mobilize deposits at low cost or reasonable cost, at least, their credit growth will suffer. And if they want to continue to grow credit, they have to mobilize deposits. And if they are a high cost, the margin will compress. So it's a catch-22 situation for HDFC. They are going about it through branch expansion and a whole lot of other things, which may or may not go down well with the street, because it's a traditional way of trying to accelerate deposit mobilization. So there are challenges. It's a very strong bank with a strong set of management, but we have to wait and watch. Probably there is no need to rush into the bank. It has corrected significantly, And at that level, it is kind of consolidating. Maybe we need to keep watching until next quarterly results, because Q4 normally is good for deposit mobilization. We will probably get to see HDFC in a much better position post Q4.
Okay, all right, Sudip, stay on. We'll have more questions for you. Let's quickly address the stocks of the day, starting with Adani Enterprises, because here the stock was really surging higher. And that is after a report came in from international brokerage, Cantor Fitzgerald. Now, this brokerage has initiated coverage on the stock with an overweight rating and a potential 50% upside. Market definitely took note of this. Hormaz is here with more details. Hormaz, what is the rationale here?
Rationales are aplenty from what the report suggests. But before we get to the rationale, I'll tell you more about Adani Enterprises as a company as a whole, the flagship company of the Adani Group. And that being listed, the first is that barring Adani Wilmar, now all of these companies have a market cap in excess of 1 lakh crore rupees. And all of the 6 companies put together, all of them now have a combined market cap in excess of 10 lakh crore rupees. Now, what Cantor Fitzgerald says while initiating coverage, they have done so with an overweight rating. As you said, it is a potential upside of 50% from current levels. Now, what they are saying, they speak about the business spin-offs. And as I highlighted, the companies that they have spun off, including Adani Enterprises itself, have a combined market cap of $156 billion. And the ability to identify future trends will hold Adani Enterprises in good stead, as it will continue to ensure that the company continues to act as a differentiator compared to the rest. Now, there are several businesses that are from the current portfolio as well, which the brokerage expects to be spun off later. Some of them being the airports business, their data center JV with HConnex, and the energy ecosystems business, which also includes the solar, wind, and the electrolytes portfolio. Now, when it comes to valuations, they are valuing the airports business at around 1,600 rupees, the solar, wind, and the electrolytes business at around 1,500 rupees, and the data center business at around 31 rupees. But pretty bullish commentary there in that report. The stock ending 6% higher, and it is now within touching distance from the pre-Hindenburg report levels of around 3,300 rupees. Back to you.
Well, a year can be a really long time, and maybe not so long there in the stock market. Thank you, Hormaz, very much for that. Let's quickly address the second major mover, the big stock of the day, and that, of course, was Reliance Industries. As we told you, all kinds of theories were doing the rounds in the market, from hopes around some sort of demerger announcement to maybe hopes on budget swaps on green hydrogen. But we have Sudarshan joining in to talk about all the records that this stock has set today. Sudarshan.
So Reliance Industries has today seen a sharp surge and added nearly 40% or say 150 points to Nifty's total gain of 385 points. Talking specifically about the stock, it's at a record high and crossed the level of rupees 2,900 per share for the first time, and the market cap has crossed rupees 19.60 lakh crore for the first time. And with the market cap addition to the total market cap has been more than rupees 1 lakh crore just in today's session. Talking about one of the news that might be a reason for stock to move higher, over the weekend there was a report from Bloomberg which suggested that Disney India's valuation in latest stocks have seen a sharp fall. In the latest stocks, Disney India's valuation is seen somewhere around rupees 37,000 crore against previous valuation of rupees 83,000 crore. Remember, sources had earlier indicated that Reliance Industries has been in talks to acquire Disney's India valuation. Talking about the brokerages which have the coverage on Reliance Industries, 80% of them have a buy call, and their current target price indicates an uptick of up to 10% even from current levels. Amongst all the brokerages, Nomura has the highest target price of rupees 3165, followed by Jefferies having a target of rupees 3140. JP Morgan has a target of rupees 3100, and CLS's target on Reliance is rupees 3060 per share.
Okay, all right. Thank you very much, Sudarshan, for that. Clearly, the Nifty may not have had the best start in the January jinx and so on and so forth, but no such concern for Reliance. The stock is up 12% in this first month of the year. So let's just quickly go back to our guests and get a perspective on this. Sudip, you go first. Given the very bold moves Reliance is taking, what's the thought now? Would you still buy at these levels?
Absolutely. Survi, I've been positive on Reliance for the last almost a year. And I think market was probably not giving it the right value. The sum of the parts is much bigger then the price at which the share is available. Look at Geo, the telecom part of it, look at the retail part of it, and of course the green energy part of it. And then there's the traditional business. I think, if we try to value each of these, and there are established benchmarks because they have brought in investors in retail as well as Geo at a valuation which is significant. If you add that to the traditional business valuation, probably you will get the green energy business without any cost. That's the kind of valuation at which it is there. And on top of that, if there is on the forthcoming budget, they get some kind of a relief, or the green energy is given some kind of a infrastructure status that again does augur very well for Reliance in terms of their profitability and tax position. So I think the 10% up from here definitely achievable, and definitely achievable within a very short time span. So Reliance definitely is a buy from a long-term investor's point of view, portfolio point of view.
Okay, all right. Gaurav, very quickly, if you could tell us on the charts, how is Reliance Industries as well as Adani Enterprises looking?
Well, if you look at the charts of Reliance Industries, it witnessed a very strong breakout, a consolidation breakout of almost 2 years. It had a retest around the levels of 2650, which is where we recommended to our clients as well. We have part book today at around 2088-90, and our targets are intended at 3200. So in my opinion, any decline again towards say 2700-750 can be a good buying opportunity for target price of 3200. And it will not only see upside. In my opinion, it will now start outperforming Nifty index. If you look at last 1 year, it has been underperforming the Nifty, but from now I think we can see very strong outperformance in Reliance as compared to Nifty index. So in my opinion, it's a buy on declines candidate for target price of 3200. For Adani, it is also looking very interesting. We have seen a consolidation coming in. It witnesses breakout, then again a consolidation. So this is a continuation pattern that we are seeing. And even Adani Enterprise can do 3,200, 3,250. One can keep a stop loss of 2,950 and buy Adani Enterprise.
Okay, all right. Thanks for that. Well, let's get to some earnings action then. SBI Cards slipped after reporting high credit cost and low revolver rates in Q3. AU Small Finance Bank as well was under some pressure after a rise in slippages and some pressure in asset quality. Abhishek Kothari, he's tracking both those two. He's joining us to tell us what went on and what disappointed the street with both those two numbers. Abhishek.
Well, Nigel, to begin with, the AU Small Finance Bank, the unsecured portfolio of the AUM actually slipped into NPA this quarter, and that actually worried the street. So credit card portfolio, I mean, for an example, did impact the asset quality. Slippages increased by 15.5% quarter-on-quarter. Annualized slippage ratio also increased to 2.42 when compared to 2.18% in the previous quarter. Hence, the gross NPA in absolute value rose by 7.5% sequentially, while the ratio increased by 7 basis points quarter-on-quarter. In terms of our poll versus their PNL, NI was ahead of our poll. However, the PAT was below our poll on account of the provisions that they had to make on account of the slippages. So brokerages did mention that they have cut earning estimate on account of credit cost pressure that they see for the bank going ahead. ROE, that will also be cut going ahead, and risk reward is unattractive right now. So Citi has a neutral rating and target price has been cut to 780 per share. Nomura has a reduced rating and a target price has been cut to 600 per share. For SBI Cards, for last 20 quarters in a row that I've seen the results, credit cost continues to be north of 4.5% in terms of annualized credit cost. So this time again, credit cost woes has impacted their performance. Revolver rate is at all-time low of 23% versus 24%, which means that customers who are using SBI Card are not translating into EMI options, and that is not good for a lender. Net interest margin is at historical low of 11.3%. Annualized credit cost is at 8-quarter high of 7.5%. Their asset quality woes doesn't seem to be getting over. Gross NPA in absolute value increased by more than 18.5% quarter-on-quarter. Net NPA increased by more than 25% quarter-on-quarter. So both the gross NPA ratio and the net NPA ratio actually deteriorated or increased on a sequential basis. In terms of the performance, their NII was above Yes Securities estimate. However, the PAT was below Yes Securities' estimate. Now, brokerages say that management expects 2 more quarters of pain with respect to credit costs. Remember that when they spoke to us last time, they said that Q3 they'll peak out, but this is not the peak out. They have further guided for credit costs to remain elevated. There is no clear path with respect to normalization of credit cost is what brokerages are saying. So this will cap and derate the valuation multiple for SBI Cards. So we have Morgan Stanley who have downgraded the stock to equal weight, target price cut to 750 from 950. InCred has a reduced rating and a target price of 500 per share. Back to you.
Okay, got that. Thank you very much for the details there. So some of those financial stocks in focus for the wrong reasons after the Q3 performance. Let's shift focus to some corporate commentary that we got in today. JSW Steel is betting on Vedanta's mining assets. Jayant Acharya, the joint managing director and CEO of the company, told us earlier that the company is interested in Vedanta's iron ore mines in Karnataka. However, he also added that they're not so keen on Vedanta's steel assets.
Well, Shriram Finance was another big voice today. Mr. Chakravarti, the managing director and CEO of Shriram Finance, expects FY25 growth to be in the range of 15 to 18%. He told CNBC TV 18 that they will be able to maintain the net interest margins at current levels. Cipla expects margins to be around the 24% mark for the full year. Speaking about the US business, which hit record sales this quarter, the MD and global CEO, Umang Vohra, said that the base business was around $225 million. Well, we'll thank Gaurav as well as Sudip for joining us on the show and giving us your valid comments on a whole host of stocks. But for the time being, we'll have to slip into a short break. We'll get you a popular segment, D Street Chatter, along with the top market events you need to watch out for. Don't go anywhere. Welcome back to Markets Forward. Well, as promised, it's time for our special segment, D Street Chatter. Nimesh gives us an insight into all the dealing room chatter. Nimesh, what's on your radar?
Hi, Nigel. Today was a day for the large caps, right? The Reliance in a single day gained almost 7%, and that helped the Nifty gain almost 2% in today's market. But in terms of individual stocks, the first stock on my list is Tips Industries. A big move in that stock after a large block, 5% equity got changed hands. I understand the promoter entity was a seller and a leading domestic mutual fund was a buyer in today's block. So disclosures will be important there. The second name is Concor, part of the PSU basket. Big move in that stock as well, despite sell flows from the larger FIs. But I understand some large HN investors are quite active in Concor of late, and hence a big move there. The third name is DLF at record levels, but still the buy flows continue. So there is a small MOC buy flow at a leading FI desk in DLF in today's trade. And the last name is KPIT Technologies, been under pressure of late. In fact, in the last 1 week, the stock is down 8%, largely on back of large sell flows. Even in today's trade, there was selling pressure at a leading FI desk in KPIT Technologies.
Okay, all right, got that. Thanks very much, Nimesh, for the details over there. And with that, let's quickly move to some of the key events that we need to watch out for in tomorrow's trading action. Ekta has that list for us. Ekta.
Well, we'll start with the big global queue. We have the FOMC meet, which is kicking off tomorrow, and it will conclude on the 31st. Besides that, we do have a lot of data from the US, such as the housing price index for the month of November, as well as consumer confidence. Italy, Germany, France, Austria, all of them will be coming out with their GDP data for Q4. In terms of results in the US, Alphabet, Microsoft, Starbucks, GM, Pfizer, all of them will be reporting numbers, something to watch out for, especially from the tech space. And talking about a couple of cues from back home, results will continue to be in focus. So we have L&T, Bajaj Finserv, Dr. Reddy's, M&M Finance, KPIT Technologies, Adani Total Gas, Arvind, Blue Star, Coromandel, Gillette, Piramal Pharma, to just name a few.
Thanks a lot for that, Ekta. Well, on that note, though, we'll wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.